Y'all know what it is.
Hey everybody, welcome back to Eggs. Today's special guest is Chris Hervochon. Chris, how are you? Welcome to the show.
Doing fantastic. Thanks for having me.
Absolutely. Yeah. Thrilled to death to have you. So let's start, I guess, maybe in the beginning. Let's talk a little bit about your entrepreneurial journey, how you got started doing what you do today, and a little bit about what you do.
Yeah. So started out my career as a golf pro, which has absolutely nothing to do with what I currently do. But I did that for like 5 minutes. It was actually about 18 months, but it felt like 5 minutes. And then I got into accounting. So I started out in forensic accounting and moved my way through corporate accounting and finance. And then while I was basically mid-career in that, started a side hustle doing bookkeeping and simple tax returns that eventually just kind of grew to the point where it's like, all right, I got to pick one or the other. And so here I am, right? I'm running an accounting firm now. It's really just an extension of being an entrepreneur. Like, you know, being a golf pro is a very, or at least it was at that point, you know, very entrepreneurial type of activity, whether it's going out and playing and kind of eat what you kill, or whether you're giving lessons or stuff like that. I've basically been an entrepreneur since I graduated college. And you know, it probably goes all the way back to like the lemonade stand when I was like 5. So like, it's just been that way.
Yeah, no, that's awesome. I mean, were there people in your life who were sort of entrepreneur-like that sort of led you down this path, or was it just sort of, I guess, just the way you are?
Yeah, that's a good question. I think it's probably a little bit of both. Like my great grandfather, he passed when I was super young. He was an entrepreneur. So, you know, the entrepreneurial spirit, I suppose, has been in my family since at least that long. My dad, he was an accountant. He did side hustle, bookkeeping and taxes when I was growing up, but he was doing it the old school way. Like he had, you know, the green ledger book with the like huge yellow paper and like the whole 9, right? And that is not me, but you know, he had a side hustle, so I saw it when I was growing up. And I guess to some extent that just kind of gets embedded in your psyche, right? And you know, you're more predisposed to it, which is probably what happened to me.
So is he kind of what got you started down the accounting world, seeing him do it and having that influence at an early age? Is that what you went to college for and everything?
No, kind of, sort of, really. So I was in entrepreneurship classes and stuff like that in high school and did business competitions. I did well. So I just kind of had a little bit of a knack for it, you know, relative to that age anyway. And he said, you know, your high school offers accounting, you should take accounting. And I did. And that was an absolute miserable failure in high school. Like it was not my thing, right? It was paper and the debits and the credits and trying to figure out the T accounts and stuff like that. And as like I don't know, I think I was like 16 at the time. That was not my thing. So I went to college and I was going to be a finance major. And that's kind of the path that I was starting on. And then I decided I was going to be an engineer. And then that wasn't really a thing. And then my dad said, like, look, you like finance. You can do anything in finance that you can do with a finance degree with an accounting degree. Why don't you try it? And so I just so happened to get a really good accounting professor in my first year in college. And she basically just changed the trajectory of, I guess, my career, and did really well and decided to major in it and got my degree in it, and it's basically just history from there.
Do you think you would have done as well or been as excited about getting into it if she wasn't there? Like
no.
Okay.
No chance.
Yeah, it's always incredible how that one teacher, that one professional can change everything. Like the outlook on a topic that you never would have thought you would have enjoyed is suddenly enjoyable just by the influence of a good teacher. So
100%. Yeah. It was the same stuff. I mean, accounting 1 in high school was the same as accounting 1 in college, but the way that she phrased things and the way that she provided real world examples and just kind of wrapped my head around the concept of like, what are we actually trying to accomplish here? That changed my entire outlook on accounting. And I love accounting now. I did not in high school. And it basically was just that one teacher who just flipped my entire perspective on the whole thing.
Yeah, it's pretty cool.
Yeah, it's super interesting. You know, I mean, there's a lot of people, especially, you know, entrepreneurs, people who have small businesses that I guess don't really pay that much attention to the accounting. You know, I mean, it's the part of the job they hate the most, all that kind of thing. And so most of the time it gets offshored or whatever, they hand it off to somebody else to do. But it seems like, you know, if people were getting some training in accounting and things like that earlier on in their career, it might help them a lot. Like, I mean, you know, and I even look at like my kids, for example, you know, they're going through school, but they never learn how to manage money. They never learn how to balance a checkbook. And at least when I was a kid, I got some, you know, they did bring in somebody to teach you how to write, you know, do a checkbook and that kind of thing. But it's like, but the basics of accounting and, you know, proper finance are really kind of like, you have to go looking. And so I wonder, you know, as you work with entrepreneurs and people who, you know, basically need accounting help, I mean, do you find that a lot of times it's a real mess and people are totally reliant on you, or am I totally wrong and people are really on the ball?
It's much more the former than the latter, for sure. Like, most people don't go into business to do accounting. They're going into business because they're doing whatever it is that they're doing. And accounting is just one of those things, like a necessary evil that you have to do. And you've got to do it for two reasons. One is compliance. So everybody's going to file a tax return, right? Or multiple tax returns, probably, or multiple types of tax returns. And then to grow the business. So what is the data and the value of the data that you can get in order to help you make decisions that are strategic in the business? And I think for the most part, what we see is a lot of fire drill type stuff around trying to be compliant with, you know, this thing, which is usually a tax return. And the way that they manage the business is how much cash do I have in the bank account? Like, what do I have today? And it really doesn't go much beyond that. And so there's this whole opportunity there to get past the compliance and get into leveraging the accounting data, the financial data that you have in your business in order to make better decisions, really.
Yeah, no, I think that's right.
That's the part that's missing.
And well, and especially as I see people who try and prepare a business for sale or something like that, that's when it really comes clear that they have been totally remiss in this stuff and they really don't understand the money aspect at all. And like you say, I mean, it's, you know, it is the thing that they want to do the least, right? I mean, they went into business to build the thing they love or do the work they love, and they definitely didn't go into it for the money. But I wonder then, I mean, how do people, I mean, I guess, you know, and we'll set aside the version of this that is just hand this off to a professional and wash your hands of it. But like, if you're a small business owner, like, I mean, where would one start to try and start pulling together their financial, I guess, story so that they could start to put together a true path to a proper financial system?
Yeah. So the first place to start is get yourself a dedicated bank account and or dedicated credit card. Well, not and or, but maybe and a dedicated credit card, right? You don't want the business and the personal to be commingled. Commingling is probably the biggest and most common mistake that we see, because it gets very difficult. At some point you have to split that out, right? Either to do a tax return or to go and actually do the financials for the business because you're going to sell it or something. At some point you got to split all that out. So having it split out from the get-go, start there. Then get yourself at least an accounting software. It doesn't matter how rudimentary it is, or an accounting process. Like, maybe it's Excel if you're super, super basic. All right, cool. That's Excel is way better than nothing. Maybe it's QuickBooks, maybe it's FreshBooks, maybe it's Wave, maybe it's Xero, whatever. It doesn't matter. But get yourself something and either teach yourself how to use it, which is not ideal, or get somebody who knows how to use it. And they can take that activity that's coming through the bank, classify it the way that it should be classified, and then you've at least got a set of financials, so that you're not having to, like, you know, run around with it like a chicken with your head cut off when you're going to file a tax return and stuff like that. You've already got the financials. And then if you're going to go to the next level, that's all right. We've had our financials, we've had them throughout the course of the year, and we can use that data to make decisions, kind of like what I mentioned. Now, where we see things like go totally off the rails is when you go to sell your business and you've had none of that. We're actually going through this with a customer right now. So, you know, maybe a portion of your business is cash based. It's cash based because we don't really want to pay taxes and we don't want to have to claim the rent. Like, cool, awesome, fine, that's great. You didn't pay taxes for some period of time, but guess what? When you retire, you want to exit the business for whatever reason or whatever, and you're going to go sell it. Well, you didn't claim that income on your tax return. Whoever's going to buy it is going to say, hey, I need a tax return so I can figure out what the business is worth, because they're going to want to know what the cash flow from the business is. The tax return is going to be underreported. So you're going to get less value for your business. And then you're going to say to the buyer, like, oh, well, you know, this isn't reality. It's actually more than that. And then the buyer's going to say, okay, fine, I believe you. But when the buyer goes to get a loan from the bank and the bank's like, well, I want to see the tax returns. And, oh, by the way, this is a problem because the business hasn't been run appropriately. They're not going to give you the loan. And so now you got a problem, right? You're not going to get the value that you want out of your business. and maybe you got to go back and restate your tax returns. It's going to be expensive for a couple of reasons. Maybe you have to take a lower value for your business, like whatever, but you're going to have a problem. You got to pay the piper at some point. And it really all starts with make sure everything's segregated, make sure it's accounted for appropriately, and make sure you're doing that on a consistent basis.
So as a forensic accountant, the first 10 years of your employment in accounting, I'm sure that really helps out in scenarios like that. Can you maybe break down what you would do in that kind of scenario? Like say you had a client that came in and said, hey, I haven't filed in 3 years and I need to get everything, caught back up. And I had 2 businesses in the process and this and that. Like, do you just take all their statements from the bank and say, go through it with a fine tooth comb and try and figure it all out independently? Or is that on the client to do? And then you just come in and overlook the numbers?
Yeah. Usually what that's going to be in most cases, that's going to be somebody who's getting ready to file a tax return. They're going to say, look, I got to get it caught up for 3 years. All I've really got are bank statements. Most commonly what we're going to see in that sort of a situation, just because that's the way that they operate, is that it's all going to be commingled through a personal account. Yeah. Like the business and personal, like we pay everything through the personal account or whatever. And okay, fine. But we're going to sit down with those statements and we're going to go line by line for 3 years, 4 years, like whatever it is. And business, personal, business, personal. All right, we segregated the business out, and then let's figure out what those types of transactions are. That gets a little bit easier. The hard part is this business, is this personal?
Yeah.
So step 1 is that. Step 2, like at that point, we can at least run it through an accounting software, put some rules on it, put some automation on it, and classify at least a chunk of it. But then there's going to be some more back and forth as far as like, what is this? And like, that's less of a problem than just figuring out what's business and what's personal. That's the biggest headache of it. But classifying it from there, I mean, it's great to have it as precise as possible, but if you're going to go file a tax return, at least if it's directionally correct, we've got expenses and expenses and we've got revenue and revenue, then at least you're going to get to a true taxable number or pretty close. And at that point, that's really all you can do.
Yeah. What if there's a lot of equipment involved and they haven't been doing the proper, what is it, amortization for that, or the
depreciation?
That's the word I was looking for.
Yeah.
If someone has, I personally have a lot of equipment, and I honestly, I doubt I've been doing it correctly over the last few years. My thought is if I ever get audited, I'm probably in the clear because I've been doing it in the wrong way. So you know what I mean? But you might have a customer here after this conversation is what I'm getting at.
I would almost venture to say that equipment's easier because in most cases, you're able to like look at it and you still have an inventory of it.
Yeah.
Right. It's like still obvious to you. Like, I don't know, like your microphone is an example. You're still sitting in front of your microphone. It's like, oh yeah, I did buy that. Right. Yeah. Whereas it's like the lunch that you had at Jimmy John's 3 years ago. It's like, well, was that a business lunch or was that personal?
Solid point.
Every lunch is a business lunch. Just think about business always.
Of course they are, for sure.
So, okay. Well, so I guess then, so you've got somebody, let's say they've come in with their business, you've started to clean up their things. Then, you're sort of back to zero, I guess. Right. But now they need to start kind of building systems and leveraging data and all that kind of stuff. What are the kinds of things that people, now that they're, I guess, sort of have a clean record or they're ready to proceed on whatever's next? What types of data points and things like that can they look at to start making business decisions?
Oh man, the world is your oyster. It depends on how much data you have, what kind of data you have, how often you get it, how clean it is, like that sort of stuff. So that conversation can get super overwhelming super quick. The place to start there is you're trying to put together basically a data strategy at that point, right? So the place to start, and what I always say is you start with a question. So the question is, what question do you want to be able to ask of your business that you currently can't ask and get an answer to in a timely and reliable way? Like every business owner has something in their heads. Like if I knew this, then I could make XYZ decision and I could really move this thing forward. And that's going to be different for everybody. But you start there and then figure out like, okay, well, how do we need to answer that question? So great example. Is this customer profitable? Let's just say you're in a service-based business like accounting, marketing, whatever. Is this customer profitable? Well, how much are you charging them? Start there so you know what the revenue is. Okay, cool. How much time are you spending on that customer? What professionals are allocated to that customer? So now we're leveraging payroll data. We're leveraging timesheet data potentially. You can do it without timesheet data, but timesheet data is cool. What are the various inputs that you're putting into it? So maybe you have to buy a specific software for that customer. Maybe you have to buy specific materials for that customer. Like who are the providers there that you have to leverage in order to deliver whatever it is that you're delivering? Various materials, contractors, things like that. So people that you're bringing in for a specific project. Where's that data coming from? How can we get it? How can we organize it? How can we tag it so that it's applied to that specific customer or that specific project? And then we can figure out what customer profitability is or project profitability or whatever it is. So that's like one of those places where you would start. You would start with what are the things that you want to know, and then build a data strategy around that, and then build processes around that.
So, and when you do something like that, I mean, is it something that then becomes managed by the client? So the person in their business is actually monitoring these numbers, or is this something that they're engaging with you guys to actually be crunching the numbers on, and then you generate a report or something?
Yeah, it depends on what it is. Something like timesheet data, we'll say, hey, you should use either this software or this software. And the reason why you should do that is because it integrates with what else, the other things that we use. Like everybody that we have is on QuickBooks Online. The reason for that is it's got the best ecosystem, in my opinion, that's out there. Most things connect to QuickBooks Online, so you can at least connect the data and then start to leverage it that way and then build reports and stuff like that on it. So yeah, we'll make recommendations in that case. The customer is going to manage their own timesheet data. They're going to approve their own timesheet data. We're not going to get involved there. Something like payroll data, different story. We will manage that. And there will be a little bit of guidance like, hey, we hired so-and-so and they're going to get paid whatever. We fired so-and-so and their termination data is whatever, like that sort of stuff. So we get some input from the customer. It just really depends. And then from there, we're building out dashboards and reporting and things like that to leverage the data that we do have to get to the answers that we do need.
Okay. So speaking of hiring and firing, like one thing that happens a lot in, especially like service-based businesses, I happen to run an ad agency or marketing agency. So I sort of am familiar with at least that side of the world. One thing that happens a lot is they leverage freelance help. And, we'll often, like in the case of our business, we use almost exclusively freelance and don't actually have anybody on payroll. But, if for those really great people that you want to try and keep on or whatever, you might want to consider a move to payroll or consider a move to full-time employment anyway. So I guess, are there any pitfalls or any things to be aware of when working with freelance or contract talent versus sort of, maybe benefits of bringing them in-house?
That's such a good question. And there's a ton of considerations there. So like the first question would be, are you in California?
Me personally, no, but in general for our audience, Are you in California?
Yeah, seriously though, because California's got very specific rules around who's a contractor and who's an employee and what you need to do there. And the penalties are super steep. So the first question is like, are you in California? And then the next point to make is, yeah, you might think that these people are contractors. You might be paying them one-off as contractors, but in reality, that's not a decision that you really get to make. It's a fact-based circumstance. So do you control what they do, when they do it, how they do it? Are you providing training and equipment? Are you providing all the materials? Like basically, do you have control over that person for the majority of their time and what they're doing? Then really they're employees. And what you do is you run the risk of basically the Department of Labor coming in and saying like, these are employees and you got a problem, right? It's not really up to the business owner to just say, oh, I'm just going to pay you as a contractor. That ain't it, right? It depends on the facts and circumstances. So getting past all of the compliance type stuff, the benefits of having contractors or freelancers are that you can hire them one-off. You don't have to pay them when maybe they're not doing anything or when you're not fully utilizing them. In a lot of cases at that point, it's a little bit cheaper. So generally on an hour per hour basis, you're going to pay a contractor more than an employee, but you're going to be saving on payroll taxes. You're going to be saving on, things like benefits and healthcare and all the things that go with that. So, maybe you end up a little bit better and then you only pay for whatever you utilize. So theoretically it's cheaper. And then you also get to pick like, this person's really good for this project and I only need them for this type of project. So I'm going to hire them for this specific type of project and that's all they're going to do for me. That's cool too. So it gives you more flexibility. But it's one of those things where you got to get past the compliance first and then make the business decisions later.
Yeah, no, that's a super interesting point. That whole, that it's kind of out of your hands whether they're an employee or not based on your relationship. Because I guess, in my mind, if I don't have you as a W-2 employee, you're not an employee, right? But I guess
it does not work that way.
I guess that makes sense. Now, in my case, we have freelance relationships from a number of different places. One place in particular, though, we run through a platform. I mean, is somebody safer to put like a platform like that in between themselves? So
like
they basically, like an Upwork type thing, something like that. Like if you're leveraging a platform like that, are you, I guess, 1 degree further separated from you're an employee, even if like, you're providing not necessarily equipment and stuff per se, but, files and things to work with?
Yeah. So I would say the short answer is no. The long answer is probably just because of the nature of how that relationship probably works, like in the real world, right? So I can go through Upwork and I can hire somebody that works for me 40 hours per week and they only work for me. And, maybe I mail them a laptop to do the work and I'm giving them access to all my software platforms and that's how they're using it. And I'm telling them that they have to work specific hours just because I pay them through Upwork. Like that's an employee pretty much. So just having that platform there doesn't necessarily provide any sort of like firewall or anything like that. It's facts and circumstances. Now, the nature of in the real world, how you're engaging those people, that's probably pretty good evidence that they're a contractor, right? Because they're probably not 40 hours a week. You're probably not giving them a schedule. You're probably not mailing them a laptop. They may be like logging into your software because, maybe they've got a client facing thing or whatever, but real world, probably they're contractors.
Got it. Yeah, no, that's interesting. Cause like in the case of our freelancers, I mean, it's exactly what you're describing, right? I mean, and like I say, we have a lot of just personal relationships too. So there's a lot of one-to-one touch kind of relationships. But for the people that we do through Upwork, I mean, we pay them through that platform. We do all our communication and everything through that platform, but they're using their own software. They're using their own computers. They're using all that stuff, right? They're basically just taking task at a time. And we've always sort of our business sort of by its very model is to leverage freelance talent. And we basically treat everybody kind of like baseball cards, right? You sort of trade one in and trade one out, depending on what you're doing. If you're shooting a commercial, you don't need the same staff as you do to animate a banner ad, right? And so we'll trade in a deck of cards and we'll pull in a new deck based on the assignment, right? And so it's never this sort of full-time kind of gig, or very rarely.
Yeah. It's cool. Like that way of doing business, that wasn't a thing like 10, 15 years ago. Yeah. Now it is. Like we've got a number of agencies who have no employees. The only employee really is the owner.
Yeah. And that's essentially how we are, how we're set up. And basically I've been doing it for 20 years or 22 years, something like that now. And, it just started out of the back of a tour bus. I was managing bands back in the days. And, cool. And so we just did everything virtually over, back then it was a Palm Pilot and all this other stuff and the world's worst internet connection and all that. But it was, we've started doing that really early. And in fact, we've just been a virtual agency, we call it, for, 20 years now. So, awesome. But it's an interesting model, but it does make for really cool capabilities, right? Because part of the problem in having a lot of people on staff is that you're sort of committed to using those people. So if you own an agency, you've got all this overhead of maybe video producers and editors and, animation guys and illustration guys and all this stuff. But if all you're doing is shooting commercials, all these other guys are sitting here doing nothing. And so it's kind of, it's a nice flexible approach. And I began as sort of a freelance designer too. So for me, it was like, it's my wheelhouse,
Love that. That's awesome.
So you focus mainly on agency work, correct?
Correct.
So Ryan would be like your ideal client or someone that you work with directly. What are some data points that he should be focusing on as a agency owner versus just a regular business like a painter or something like that? Or are there certain things that he should prioritize over like a landscaper or a painter or another business type?
Yeah. So service-based businesses are unique versus businesses who make stuff like widgets or, produce like physical, tangible things, right? So service-based business, it's really all about utilization and how efficient you are in utilizing the labor that you have. It's really about maximizing your labor model, right? And being able to flag like what resources that you're going to need before you actually need them having a full revenue pipeline, paying attention to margins. So, one of the things that's interesting in a model like Ryan's, the way that we would be doing the accounting, his gross margin is probably going to be lower than what industry average would look like. And the reason being, he's using all contract talent, freelance talent, right? And that's all going to go into cost of sales, or like in QuickBooks, it would be cost of goods sold, right? Even though it's not good. Doesn't matter. So benchmarking that gross margin against himself is going to be a much more appropriate measure than benchmarking it against the industry. But bottom line, you can benchmark that against the industry, right? So you got to pay attention to margins. So gross margin, net margin, production margin, basically where you're taking gross margin and then backing out the production related labor. Those are important. Cash flow from operations is always the number one thing. Like, it's great that the business is profitable, cool, but if profit doesn't actually turn into cash, then it doesn't matter. Everything has to turn into cash at some point. Like, you can't pay your mortgage with, accounts receivable. You got to pay with cash. So we pay really close attention to cash flow. We pay really close attention to margins. We pay really close attention to utilization rates, things like that. Labor efficiency ratio, that's another one, another way to get to the same kind of place.
Okay. Well, maybe while we're picking on me a little bit, maybe I'll pick the brain with a little advice. So I mean, first of all, you don't want to be my accountant. You mentioned the commingling thing, and I'm the worst. At this point, I opened a business checking account because I was going to transition away from another bank and get clean. And then the first of the year happened, and I haven't yet. And so now I've got double the accounts, and they're all combing. So it's even worse. And so, but no, I'm the worst. My accountants have been with me a long time though. Or my accountant and my bookkeeper. So I think my bookkeeper cleans it up before the accountant sees it. So I think we end up in a situation where my accountant doesn't hate me, but nonetheless. So, but one of the things that's happening right now is I've recently taken a position as like sort of a CMO in a tech company or a tech startup. And basically part of our relationship, our agreement is that I will try and move out of the core of my agency, my personal business. And so basically they need my time. And if I'm working in my business every day, I can't do that. And so I need to try and figure out how to get out. Well, it wouldn't have been a big problem. Actually, last year was our slowest year in 10 years. I thought we were just done. And then in October, we landed a giant client who's now got us for 2 or 3 years. And so now I've got to figure out how to manage that business and basically move myself out of being the core provider, because now I won't be the guy doing the design work anymore, or the guy leading any of that. I'll probably still be doing some creative directing and stuff like that at night for a while, but I mean, eventually I've got to get out of it. And so one of the things that has to happen is I have to make this transition from being in the center of my business or working in my business to working on my business or managing, moving to the perspective of a business owner. And so I wonder, like I mentioned, my sins of commingling and, all the other horrible things that I do and bad accounts that I keep and bad records that I have and all this stuff. As I start to move out, one of the things I need to do is obviously get straight, right? And basically, I will be taking a salary from this new company, so I won't be needing to pull money out of the current business anymore. And so I hope to transition, mostly, if not entirely, off the money that I take as sort of currently, we just call it a member draw. And so I'll be moving out of that, hopefully, and just getting into, taking my salary, living off my salary, and being able to keep all the money in the company, which theoretically will make it a little cleaner too. But anyway, I wonder if there's any guidance you could give me just in terms of, and I think we've actually covered some of the things, but, where I might start to really try and change the perspective, or rather put on the hat of the business owner instead of the, sole proprietor, or, we're actually a S Corp or whatever, but you know what I mean? Like, being the guy who works in the business to the guy who owns it.
Yeah. So the place that I would start, because you're the only employee, right? Everybody else is freelancer, right, contractor, that sort of thing. Yeah.
Yep.
So the place that I would start is document all the functions that you have inside of the agency. And then you're basically going to write your name in all those different functions, because you do all the things, right? Like, you're the account manager, you're the director of ops, to some extent, you're the accountant, you're the salesperson, like, you do all the things, right? So just document what those are, put your name in there, and then basically just start working your way out of all of those. And I would start with basically customer service, account management, bring somebody in, get somebody to do that. Then I would move to ops, bring somebody in, get them to do that. So they're basically the quarterback of all of the different freelancers and contractors and things like that. And that's going to materially move you out of the business. Then you bring in somebody to do sales. So now you don't have to sell, right? And so just work your way through all those different roles and functions and remove yourself systematically one by one. And then before you know it, you're owning a business as opposed to running a business.
Yeah, no, that's actually a pretty clever take. I mean, I haven't heard, the idea of actually outlining each of those positions, and basically filling them with myself. And I have, I guess, sort of started doing some of that on my own. I've got a person who's doing account management and stuff like that now, but I'm finding that the biggest struggles I have is just kind of handing things off, right? And now starting to rely on people. And sometimes it's easier to just do stuff than to wait for somebody else. And, so I'm finding I'm having to mature a lot as sort of, I guess, a business owner, stuff that I used to kind of cheat or get away with because it was just me. Now all of a sudden I'm going to be accountable to other people and I have to figure that out.
It's really hard. Really, really hard. Delegating is really hard. And you got to let people like sink or swim, right? And it's like, oh man, I built this business and it's hinging on somebody else executing what I did exactly the way that I did it because that's what got us here. And it's so hard. It's so hard,
I think
that's right.
I think there's also a mindset thing too, that if I bring this person on, now I have to pay this person, and that's coming out of the bottom dollar, like, oh, that could have been going into my pocket, but now it's going into his, and that's a mindset shift as well too, as to justify the need for the guy because I could just do it myself. And I think that's a crutch that a lot of people actually fall on, is, like, why should I pay him to do it when I can do it myself? But really when it comes down to it is, if you can, leverage other people's time and free up your time and make money in the process, that's really the route you should be going.
Yeah, it seems to me that mindset is actually maybe the biggest piece, or, it's certainly been the most challenging part for me because I'm just, I began life as a designer. Basically, I outgrew myself. And so I had to start bringing on help and that's kind of it, so it's like, the whole thing is me. And so it's like, so now, I'm having to back out entirely. And so part of the discussion was even, do we go on? And in my mind was, it's enough money that, I would like to take a piece of that every year and, take that as an owner. And if I'm replacing my income, then basically I could afford somebody that's, at my level or better. And, so my thought is I can make it work, but it's, it's things like you mentioned, like that sales function, right? Like, I don't know how to fill that role in that, I do all the sales, but I don't do any sales. Just, people know me or I build reputations and then I start to know people and we build, relationships and work comes in that way. It's not a very aggressive way to grow a business, but it's always made for good business or good clients. And, but to bring in somebody to do sales, and I did take a stab at this about a year ago. I hired a firm to do some sales and cold calling and stuff, but it just doesn't seem to work for marketing agencies very well.
Yeah, it's super hard. One of the other considerations there, bringing it back to something we talked about a couple minutes ago, is if the business doesn't scale beyond you, you don't really have a sellable asset.
Yeah.
Right. Because some buyer is going to come in and they're basically buying you and what you do, and they just want you to do that for them pretty much. Right. So if you move yourself out of that role and you're just the owner, now you've got a sellable asset. And there's a lot of leverage that comes with that from a financial perspective. And that's a good thing. But moving yourself in that direction is super, super hard. And part of the reason why it's so hard from what we see is because businesses that grow, ultimately, they're going to see their net margin shrink in the near term. And the reason why you've got to do that is because you have to bring on those people that will allow you to grow. You've got to bring on the super talented designer. You got to bring on the super talented salesperson. You got to bring on the ops person who's not necessarily driving revenue, but frees up you to go do the other stuff that's going to help the business grow. Right. And so you see that margin shrink. It's like, oh man, money could have gone in my pocket, but it's not. So, it's a whole mindset shift. And it's one of those things that's really, really hard, which is why not everybody does it. Not everybody can do it, but it's one of those things, if you're really intentional about it, and if you're learning and if you're getting better, on a consistent basis, and you're moving yourself toward that, then at the end of the rainbow, you get rewarded pretty heavily. You got a sellable asset. You can exit the business. You can get your big payout. You've grown a bigger business and you're getting probably a smaller piece, but a smaller piece of a bigger business in a lot of cases is bigger than a big piece of a smaller business. So, there's a lot to think about there, and it's super hard for sure.
Yeah, no, I think that all makes sense. And even in my world too, I mean, I think when I was younger, I had some kind of grand aspiration that maybe my kids would want into the business or, something like that. And, fortunately for me, I guess both my kids are smarter than me. So they want to go into law and they want to do all this other stuff. Right. And I'm like, well, you sure you don't want to just be a lowly graphic designer? But no, they I don't think are going to come back around. So the prospect of turning it into something sellable, I mean, for a couple of reasons. I mean, one, in being self-employed my whole life and being, a freelance guy and being wildly irresponsible. I don't really have like a 401k or like a lot of traditional savings, the way people do, like if you just work for a company your whole career. And, I mean, I've done some things and, unfortunately I had saved a lot. And then in our worst year ever, we spent it all. So now, unfortunately, I'm starting over. But having something sellable could reasonably contribute to being that 401k down the road or being that retirement plan. Right. So, I mean, some of this can be future planning for that as well. So I think that, for me anyway, the good outweighs the bad, or there's more value in trying to keep the business afloat and, transition out of it and let people who are better and smarter and whatever run it than for me to stick with it forever.
For sure.
Yeah. For me, I've been a DJ for 20 years and, my reputation as the DJ isn't sellable. I'm that guy. And so like when I go to a wedding or if I go to a club or whatever, I can't substitute someone else in my name and say, here, you do me. It just doesn't work that way. And so for the last 4 or 5 years, I've actually been investing a lot more into lighting and to doing corporate events because that's something that can be done with someone else. There's no, I can put someone behind a lighting controller and have him control the lights, but I can't put him behind the turntables and have him be me. So I think that's kind of my approach to being able to sell this someday is as a business, someone else can step in and buy all my lights and buy all my clients and run that and run the corporate world. Whereas I can't have them jump in. I could say, hey, I've got these relationships built up. I'll introduce you, but I can't say you're going to get hired because you're not on the same talent level. So that's kind of been my approach to try and maybe somehow sell all this someday. But for the near future, I think I'm the dude, the guy in charge. But
so one thing we were talking about a little bit ago, as we were trying to, navigate how one might move out of their business or start to, spend money to basically make money down the road, even if it means, you're making a little less initially. I think one reason, and, again, correct me if I'm wrong, but I think one reason people are reticent to engage with like a CPA, for example, or, really any professional service, is cost. And I wonder if there isn't, is it fair for a person to expect some sort of ROI on a professional service like a CPA versus, the alternative where they try and do it themselves or whatever?
Yeah. So if you've got a good financial relationship, like a good relationship with an advisor that you're leveraging, then you should expect an ROI for sure. Where it gets really, really hard is quantifying that ROI is really hard, if not impossible. So here's an example. If you come to me and you say, hey, here's my tax returns for the last 2 or 3 years, here's my situation. And then I say to you, okay, well, if we make a couple changes, we can save you whatever, 10 grand in taxes over the next, 2-3 years until the current tax law expires, guaranteed, maybe beyond that. And it's going to cost you $2,000. Like, all right, well, you're getting like a 15 to 1 ROI. Let's just say it's 3 years. Great. We quantify the ROI. Awesome. But if you come to me and you're like, hey, I've got this specific business problem and what do you think? And I say, oh, well, you should go do X, Y, and Z. How do you attribute that advice to the extra cash you're going to be able to take out of the business for who knows how long, that advice is going to be relevant, or it's going to allow you to make whatever decision that's going to grow your business 2x, 3x, 4x, like whatever. It's really hard to attribute that back to that specific data point or that specific conversation. So, what a CPA or an advisor can give you is some certainty around, what you're thinking and your action plan. But attributing that to a quantifiable ROI is much more difficult than looking at a tax plan for sure. But you should get an ROI. Absolutely.
Yeah. And I think that's probably true with most professionals. I mean, now granted, especially, I guess it depends what they're doing, right? But if you're talking to most consultants and they're vetted and of reasonable merit and all that kind of stuff, typically speaking, you should, see a greater return than you spend. So I think it makes sense. And especially when it comes down to the finances, seems like there's a lot of room for business owners and individuals to sort of leave money on the table because they don't know what they're doing. Or like Mike mentioned earlier, if he's not depreciating his stuff correctly, is he not getting as much off his tax debt as he should? Or, are there, little pitfalls that people just don't know if you don't engage with professionals? So it makes sense to me that there would be an ROI, even if, maybe it is a little hard to show sometimes.
Yeah. And we see that with agencies as well, like especially agencies who specialize in branding. Like, what's the ROI on branding?
Yeah.
How do you quantify that? Right. So when you say, oh, we're going to charge you $100,000 to do, all of these different things and basically reshape your brand. All right, well, what am I going to get out of that in revenue in the next year or 2 years, whatever? You can't answer that question. It's almost the same thing. It's the same thing in a lot of service areas, particularly mine, with the exception of tax planning. Tax planning is the easy ROI calculation.
Interesting.
Mm-hmm.
Huh.
Yeah.
Well, Chris, we're getting kind of to that time. We got like 5-10 minutes left. Do you want to tell people where they can get in touch with you, how they can reach out, and any other things you want to mention?
Yeah, absolutely. So best way to find me, betterwaycpa.com. All of our contact information is on there. All of our social links are on there. We've got a whole page of resources. So if you want to hear more or read more or whatever about, some of the things that I've touched on, as well as some other stuff that's financial related, it's all right there and it's all free.
Cool. You also mentioned before we got started that you've got a podcast. Is that right?
I do. The podcast is CPA focused. So it's focused on other accountants, and it's myself and my co-host, Jeremy Wells. And basically we just either bring on guests every single week, or we'll just talk about something that's going on in our firm. And the whole idea is just elevating other professionals in doing advisory work and running better firms. And so that's what we're focused on. And it's been a lot of fun. And so, yeah, you can find us there, and it's called CPA Advisory Show.
Do you only work with certain type of clients? So is there an ideal client that if they're, obviously an agency owner, but do you work with other people as well?
Good question. So we're about 75% marketing and creative agencies. Ideal clients for us are somewhere in that 5 to 15 person range, although we've got clients who are like literally one employee and then a whole bunch of freelancers. So I say 5 to 15 people because it usually resonates, but generally that's like $500K in revenue to $5 million in revenue, somewhere in that space. So that's 75% of our business. And then the other 25% is going to be nonprofits. We've got some trades, and then we've got some other service-based professionals as well.
Okay.
Very cool. Yeah, no, that's great. Well, thank you, Chris, so much for taking the time to do this show today. I mean, I learned a ton. I've got a ton more to learn, and hopefully, maybe we'll circle back around. Maybe we would be an ideal client one of these days.
Yeah, I so appreciate you having me. And it was a great conversation. It's a lot of fun.
Absolutely. And thanks so much to everybody who tunes into the show this week and every week. We'll see you guys next time.